Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. My guest this episode is Jordan Trimble, President and CEO of Skyharbour Resources. Welcome back, Jordan.
Thanks for having me. Looking forward to catching up.
Yeah. So let's talk about your upcoming drill program. It's the most extensive drill program that you're to date, both your Russell Lake and more uranium projects. Can you talk about some of the key objectives for this multi-phase program?
Yeah, well, so it's the largest drill program and hence the largest budget for a drill campaign we've ever carried out. It's going to consist of 18,000 meters of drilling across our two co-flagship Russell and Moore Lake projects. So these are two advanced stage exploration assets that we've been actively advancing for a number of years. The first phase of drilling, which we've just commenced, a 5,000 meter winter phase of drilling at our Russell project. The objectives there are quite straightforward. One, we are looking to make new high-grade Athabasca Basin uranium discoveries. We're looking to be that next big discovery story, and this project is ripe for discovery. It's a discovery-ready project. There's been a fair bit of historical work done over the last few decades. We last year discovered for the first time multi-percent high-grade mineralization in what ended up being the best drill result from the project historically, up to 3% U3O8 over a half a meter. That was within 2.5 meters of 0.8%. So it's a great start to what we believe will be a new discovery. This year, we want to go in, we want to expand on that and effectively deliver market-moving drill results from the project. Now, just another quick note, it's a strategically located asset wedged between the McArthur River Mine Project to the north that's owned and operated by Cameco, one of two operating mills, the Key Lake Mill to the southwest, and Denison's Wheeler River Project. Denison's one of our largest corporate shareholders, and they're developing what's called the Phoenix deposit, which is just a few kilometers away from where we're drilling at some of the higher priority targets at Russell. Now, adjacent to Russell, we have a 100% owned advanced stage exploration asset in Moore Lake that we've been advancing for a number of years. We are also planning a 5,000 to 7,000 meter drill campaign there this year. Again, much like at Russell, which will end up being about 11,000 meters in multiple phases. We're going to drill in multiple phases at Moore as well. So the objective there is to go in and continue to expand a known high-grade zone, the Maverick zone. There's multiple high-grade lenses on a conductive corridor. We've had grades as high as 21% U3O8 over a meter and a half. And last year, with some drilling that we carried out, we announced 3 meters of 7.3% U3O8 at relatively shallow depths of about 260 to 280 meters. So that project, there is high grade there. We're looking to expand that. And we're also looking to add new discoveries at the project to add value for our shareholders. So a lot of drilling planned at both of those projects this year, fully funded. It'll take us right through to the end of the year and keep an eye out for news flow from those results as we work through those various drill programs at those two projects.
Is the intention, or are you nearing a sort of a resource estimate? Is that the goal? Is that something that you're looking at for the near term, or like what's the timeline for that?
Yeah, so at Moore Lake, we are working on an initial resource estimate. The drilling this year will help us in establishing that. As I mentioned, there's been a fair bit of historical exploration at the project, which includes a lot of work that was done in over the last few decades to delineate these shallow, high-grade lenses of mineralization. What's also interesting at Moore Lake is the fact that the high-grade mineralization, given that it's shallow but also predominantly sandstone hosted, there is the potential down the road to look at one of the two surface mining methods that's used in the Athabasca, Sabre, and what Denison's proposing to use at the Phoenix deposit, ISR. So we're quite excited for the prospects of expanding that resource at Moore, adding additional discoveries at the project, but not to take away too much attention from Russell, because that's where actually we're going to be doing most of our drilling this year. Of the 18,000 meters, about 11 to 12,000 meters will be at Russell. And just a quick note at Russell, We are now joint venture partners with Rio Tinto. They are a large shareholder of the company as well. So we're excited to work with them moving forward as a JV partner. And again, like I said, we truly believe this year at Russell, given what we saw last year, given some of the historical results and our strategy this year, that we can deliver a game-changing results from that project.
So along that lines of your, partnership with Rio Tinto, you've also been actively forming other strategic partnerships, to advance your uranium projects. Can you talk us through sort of the key factors that guide your decision when selecting joint venture partners and how they contribute to your long-term growth?
Yeah, so this is in reference to our prospect generator business. And just to summarize that, we over the last number of years, we've grown this secondary part of the business. First and foremost, we are an exploration and discovery company. We're out there looking, as I mentioned earlier, making big discoveries at our two co-flagship Russell Moore projects. But we have this secondary part to the business that's evolved quite a lot in the last few years. We now have 9 partner companies spending potentially over $70 million in combined project consideration. So just under half of that in exploration funding coming from these partners. The other, call it half of that in cash and share payments coming from these partner companies to Skyharbour. 3 of them are joint venture partners, one of which is a strategic larger partner in Uranium. And then we have 6 active earn-in option partners. So these partner companies are still spending money at those projects to complete their earn-ins. And if you look at the host of partners that we have, we're expecting a number of larger drill campaigns and exploration programs this year, highlighted by Uranium carrying out a 6,000 to 7,000 meter drill program at the Preston project, which we're going to participate in as a minority partner. But we also have other partners, including North Shore, Terra Clean Energy, UraX, and Mustang, all planning to carry out either drill programs or larger field programs this year at their respective projects. So it provides a lot of optionality value for us, and it's key for us to bring in good partners. Obviously, Uranium is a larger strategic partner, but the other partner companies bring geological expertise to the table. They're able to raise capital, and most importantly for us, they can advance the projects while we stay focused on our 2 core projects of Russell and Moore.
So let's talk a little bit more about sort of the macro, the high level uranium market. The uranium market evolves as it evolves, and demand continues to grow. What are some of the strategies that you're implementing to enhance and maintain your competitive advantage?
Yeah, well, look, Skyharbour is, we're positioning the company to be a go-to name, a one-stop shop, if you will, for high-grade exploration and discovery potential in northern Saskatchewan in the Athabasca Basin. If you look at the market right now, despite a recent spot price pullback, the long-term prices continue to remain strong. We're also seeing an east versus west bifurcation. And so as a Canadian company, as a Western company, we offer investors exposure to exploration and development in Western Canada, in North America, where the highest grade depository of uranium in the world is. That's in northern Saskatchewan. And a couple of other unique features of Skyharbour. We're one of the largest, actually the 3rd largest by acreage mineral tenure holder in northern Saskatchewan, with 36 projects covering over 1.5 million acres. We talked about the 2 main assets and then the 13 other projects that are being advanced by those 9 partner companies. But we have another 20 plus projects that we own 100% of that we're actively seeking new option and JV partners on that we can look to monetize going forward. That's another great part of that prospect generator business, is it allows us to keep the equity dilution in check by getting cash and share payments from these partner companies on an annual basis. The other great thing is we've assembled one of the, I'd say, best exploration teams out there. In fact, we just brought on full-time a new VP of exploration, a gentleman by the name of Sidar Donmez, who was at Denison, a partner company of ours, for over 17 years. He was there at the discovery of Phoenix and Griffin at the Wheeler River project, right through to the feasibility study that they issued just a few years ago. So he knows the Athabasca Basin and the discovery process and resource delineation very, very well. But most importantly, he knows that specific part of the Athabasca Basin and the geology there very well, which is where we're drilling at Russell and Moore Lake. So we've got the assets, we've got the people, and the timing with the uranium market. Again, there's a structural supply deficit despite the recent pullback in the spot price, which is on relatively, low volumes, right? It's important to note that despite that, the long-term price remaining strong, other prices of the intermediate products in the fuel cycle remaining strong. And I think this year we'll see the utility contracting ramp up. We'll see that supply strain really impact the market, and the geopolitical tensions that we're seeing globally that, have helped underpin over the last few years strength in the uranium price. I think that those factors are going to continue to put upward pressure on the uranium price. So we're very excited for the year ahead. I think the recent pullback and correction is a healthy one. I think that we're going to see this bull market be a much longer, more sustained bull market for this commodity. And you simply do not have new large amounts of supply, specifically in the West, that can come on in the next few years to meet that growing demand. The demand side has been very robust. Obviously, there's the over 60 reactors under construction globally currently, but that doesn't account for any new SMR, small modular reactors. We've seen over the last few years headlines from big tech and hyperscalers looking to utilize nuclear energy as a baseload emissions-free source of electricity for AI and other high-tech industries. So I think that this source of electricity and demand for uranium is going to continue to be quite strong and robust going forward.
Right. And in terms of catalysts, I know, you're looking at results, you're doing a lot of drilling. Other catalysts that are coming up that our investors may want to look forward to.
Yeah, well, so it's a very catalyst-rich story. We've talked a little bit about the drilling, the 18,000 meters at Russell Moore, but we are expecting an additional 15 to 16,000 meters of drilling from our various partner companies, including Orano, as I mentioned. They're planning to drill 6,000 to 7,000 meters this summer at Preston, a few of the other partner companies as well. So you're looking at 30 to 35,000 meters of combined drilling across numerous projects of ours in the Athabasca Basin, and a good chunk of that being funded by the various partner companies. So there's a lot of optionality value there. And also keep an eye out for additional option and JV partners. As I mentioned, we have an inventory of properties that we're actively seeking partners on. And we continue to add to our portfolio, whether it be through staking or property deals with other companies. So we continue to grow our Athabasca Basin uranium project portfolio. And last but not least, we're as I mentioned, well positioned to participate in this longer term bull market that I think will play out for the uranium market. I think we're going to see a lot of appreciation, value appreciation over the coming years. And Skyharbour is one of only a few remaining pure play advanced stage exploration companies actively operating in the Athabasca Basin. So going forward, we will be looking at M&A opportunities as they are presented to us. And again, anyone that is interested in looking at the company, I implore you to go check out our website, www.skyharbourltd.com. We trade under the ticker symbol SYH on the TSX Venture Exchange. And we also have an OTCQX listing in the US as well.
Great. Well, thanks for sharing your insights and your company updates today, Jordan. Looking forward to speaking with you again for some of those catalysts that are coming.
Thank you for having me.
And thanks everyone for watching. Join us again next time for another edition of CEO Insights.